So hello everyone and welcome to the To Extend Your Cash Flow webinar with Richard Thériault. So we understand that our industry is going through unprecedented events and that tourism is greatly impacted. So cash flow is king, and we hope that this session will help you extend your cash flow, and hopefully it actually will make the situation less of an impact on your business. So this conversation, the webinar will be recorded and will be available to you via email. We'll send you an email and on the website of TINB. So Richard will also be giving us some tools that will be sent via email afterwards as well. So I will be monitoring the questions. So if you have any questions, don't hesitate to put it in the conversational aspect, or there at the bottom, there is an actually Q&R Q&R section so that you can add to your questions right in there. So the presentation should last between 20 and 30 minutes with 10 minutes question period. So if you have any, if you have a few seconds also, we would love to see who's on the webinar. Tell us who you are and where you are at this point physically, in which region are you situated. And so I'm going to give the rein to Richard, and I thank you in advance for he will introduce himself as a part of his presentation. So take it away.
Okay, so I'm going to share the screen. You guys see this? So my first time doing a seminar, so I'm no expert by any stretch of the imagination. I'll talk about what I know. So I'm a cash flow person by trade. Have been in the industry for about 40 years. So today we'll talk a little bit about the steps to completing an 8-week cash flow, and I'll explain why an 8-week cash flow, how I use it. We'll complete the template together, and I'll make the template available. It's a very simple tool, but it has a very important message, if you will. So a little bit about myself. I've got two major careers in my life. Like I've got over 40 years experience in finance and business. The two major careers is I was an employee for about 15 years working for National Bank of Canada, BDC, and I was a VP of Finance for Environment Air, a manufacturing company in Coquang, New Brunswick. And then the second part of my career, 25 years, I've been an entrepreneur. So I've been self-employed for the past 25 years. Living from client to client, no fixed paycheck, all that the joys that go with being a self-employed person. Started in consulting with Links Management Group. Had a boat building company, Magna Group in Baie-Sainte-Anne with my family. We closed that down in 2005 in an economic downturn similar to what we're living here. And since 2005, I've been a partner at NuFocus Group. Right now, the companies that we have within our group is NuFocus Group. So a multifaceted, holistic consulting firm. We have expertise in finance, in operations, in strategy, market development. So we've been around for 15 years, as I said, with NuFocus. Last year, we formed a new group called the NuFocus Capital Group, and it's really about financing solutions for companies. So I had been doing it as an ex-banker for existing clients for a while. We found that going with the branding of NuFocus Group gave us more credibility in the market in finding financing sources. We deal with over 100 different financing sources, and we can find financing for very specific needs. And then about 3 years ago, we had started a company in 2016 called Globex Market Development. And basically, a lot of the clients that we had at NuFocus were clients that, once they had a relationship in the marketplace started, they could really fill that need really well, but they were having a hard time at opening new opportunities. So I have a couple of people working with me in that company where our goal is to open up markets, to find new distribution networks, to find new markets. And once the first connection has been made, like we move on to to other files, and the clients continue the relationship with what you're doing. So that's a little bit about who we are. So the steps to completing the 8-week cash flow. So I started the 8-week cash flow probably just coming out of Magna Marine. The company had closed during the downturn in 2004, 2005. The economy at that time was really tough in the fishing industry. And so we had closed. And I started working right away for a company that was in financial difficulty. And we were working with a trustee at the time, and he says, we need to have a clearer understanding of the company's cash flow. So we sat down. It was a very simple spreadsheet that we developed, and it really helped, have a clear understanding of what's coming in, what's going out over an 8-week period. And what we would do is make sure that each week we'd go in and do an actual. Okay, so we'd look at what really came in, what really went out, and then just kind of looked at, okay, where are our problems? It's hard to look at the first time you do it, because a lot of times when we do it, it's because we have cash flow issues, so we seem to find the holes. But it also provides you with a great relief when you can start seeing your problems 6-8 weeks in advance and starting to make arrangements to fix them. So when we look at the cash flows, first thing we look at is what amounts will be coming in. Okay, so we're looking at accounts receivable, we're looking at loan disbursements, we're looking at, have we sold any assets that we could get cash coming in, any HST refunds coming in. In today's world that we're living in, are there government programs that we can take advantage, and any other sources that could come here. Sources could be from personal cash, from family and friends, from investors. So any source that could come. Then we look at what needs to be paid. Okay, so again, we look at accounts payable, our payroll taxes, CRA remittance, the loan payments, the credit cards, utilities, insurance, and any other expense that goes out. The template looks something like this, and I'm going to switch and go to the real template for a minute. So everybody sees this. So basically, what we try to do going in. So as you see, so this would have been my last week. So the week ending April 3rd, ABC company had paid me $3,000. XYZ had paid me $3,500. Client 3, and usually I kind of use the rule of the 80-20. So my larger accounts that I know are coming in, or my larger sources of money, I identify. The other ones I might put in as other, and let's say we commonly collect $2,000 a week. I'd put that in there. So if I'm looking here, we'll say that this company has the 3 major clients. So we're looking at it and say, okay, well, this week they're going to pay us, we're going to get another $5,000 here, and then we might get $3,000 here and $3,500. Oops. And then this week, this client owes us 5. And then again, there's 3,500 from this one and 3,000 from this one. So we break it around to see what's coming in, okay? And then I'd look at what else could be coming in other than that during this week. So I may have an HST refund that's coming, and the HST refund is coming, like I'm going to file at the end of April. So let's say by the 15th of May, I should have my HST refund, and that's $15,000, okay? any other sources. So in this case, we're going to talk about the small loan that the government is making. So we're going to say, okay, we're going to apply for the $40,000 cash flow loan, and we put that in there. So that kind of gives me an idea of what could be coming in. So now I'm going to look at payroll. So I've got a payroll of $3,000 a week. So I'm going to bring that across. Car loan, I'm paying $500 every second week. Payroll taxes, we know right now we don't necessarily need to make them, but we're going to say for now we're going to put them in. So I'm paying $2,500 every 15th of the month. I don't have any HST to pay because usually I get a refund. My corporate taxes, we're going to say are paid up. Credit cards, like I'm putting every second week about $750 on my credit card. So I have to make a payment to make sure that I have that amount available to me. Then payments to my suppliers. So, I'm outsourcing some of this work. So I'm going to have to pay roughly this amount every second week. So I've made arrangements with them. So we're going to say that, we're paying the $2,000 every week. Miscellaneous expense, about $100 a week. Gas and travel, same thing. No, we're not traveling that much now. So we're going to say that's every month. 125. Insurance payment, so that's every month. So at the start of the month, we're going to pay our cell phone bill, 150, and we're going to pay our insurance of 250. So that kind of gives me an idea of what's coming in, what's going out. Okay, so in this case, I had cash available of $20,000. Let's say I have no cash available. So basically, I start looking at this and saying, okay, I've got a hole of $4,000 or $5,000 here. Okay, so what can I do to avoid facing that hole? Okay, so is it that I postpone some of the payments that I have here and ask my supplier to say, listen, I'm going to have some money coming in the week, because when I get my $40,000, so I might say here, I'm not going to pay this, make arrangement with my suppliers. And come here, I owed them $10,000. So I need to put, the same amount still needs to come out, but now I have a little bit more room to be able to make sure that the information is going through. So for me, this is kind of how you work this. So at the end of this week, okay, so now I come here. So I'm kind of looking at it and saying, okay, well, with the $40,000 in this case, I should be okay doing it. And if I receive my loan from the government and the HST, we should be, cash flow should be okay. I'm looking at my periods and I'm fine. But let's say I'm doing here, and again, the actual, and this didn't come in. So client had said they were paying, but they couldn't pay, and they say, well, we can send you 2,500 and 2,500 instead. Okay, so all of a sudden I have a shortfall here. So this is where, I either make arrangements again on what I pay. Okay, but let's say I can't not make arrangements here. I might have a personal line of credit, or I might have a credit card, and I'm going to say, okay, well, I'll advance $2,000 here, but I want to take it back out here. Okay, so again, this is a living document. So for me, when I do this, and I do it for my own business, and it's been a saving grace for me, is as I look at it, I'm always looking at what's coming. In my own business, I'd have a line here in yellow that would say new business. And if I have a huge hold, so let's say here in the month of we're going to say there's a big payable to make here, $25,000. Okay, so I'm finding out that I now have an issue in the last 2 weeks of May. I'm going to be short about $10,000. Okay, so I know that I need to be looking for $10,000. Is it that I have to start collecting a little bit more from my receivables? Is it that I need to be talking to somebody else, and maybe here BDC can come in with a loan, or we can postpone some of our payments? So I might come here and say, okay, well, the car loan, knowing that I have a problem, the car loan I'm going to postpone for 6 months. And I might postpone my business loan, but I'm still short 6,000. So I'm still looking for a $10,000 source here to cure my problem. Okay, but I know it. I know it at this point. When I start looking here, and I've set out my 6 weeks or my 8 weeks, I know that this problem is coming up. So I have to start thinking of it now, rather than waiting for it to pop up this week and all of a sudden say, geez, I need to find $10,000 today. So as I'm working this cash flow, I kind of do it. So I do 4 weeks actual. So I do my actual. When I get to this week, I add 4 weeks and I hide the 4 weeks from April. So it's a living document. I'm always looking at it from what's coming on. And like I said, like if I'm looking here and saying, I've got ABC company is supposed to pay me 3,000. Well, I might, if I think it's coming in this week, I might put it here to be safe, just to give me a little bit of time. But I need to be making those calls. If this money is owed, I need to be progressively going out and doing it. The same way, though, if I owe money and I'm doubting that this is going to come in at the time, and again, let's say it's a 1,500 that he can only pay me this week and 1,500 in this week, how does it affect cash flow? Can I still live with it? In this case, I'd have a shortfall. So what do I do about that shortfall? So being a living document, it's all about always having an eye on it, looking at it a week at a time, looking at it, how you can affect it, and then adjusting as you go along. Like I said, it can be very hard to look at when you're first starting out, and you have this daunting task of saying, oh my God, I've got a shortfall of $20,000 or $25,000. It's better to know it and make the arrangements. So we can control a lot more what's going out than what's coming in. So this is where we need to do a lot of work in the world that we're in right now. We need to do work at this point. We also need to do work, like I'm advising my consultants at NuFocus, and I'm advising my clients the same thing. Whether you need money here or not, cash is king. If there are programs available, take them. If there's postponements available, even though you have the money to pay your mortgage, take them. If you can postpone your car payments, take them. Cash truly is king in an area. It'll permit you to be able to take a breath and make the right decisions if you're not always at that last cent. So we're going through something that's never happened before, and really, it's hopefully it's a once in a lifetime occurrence where everything has been affected. But by the same token, the positive, if I can say a positive about it, is everybody's going through it at the same time. So it's no longer, when I mentioned that I had a business and we failed in 2005, we closed the doors and all that. At the time, our industry was in chaos. but everything else was going fine. So nobody kind of noticed that 22 boat builders disappeared in Atlantic Canada over a period of 18 months. It was business as usual. Everything else was doing. The same happens from time to time. The contracting industry. It's, you'll see that a bunch of contractors will go out of business because there's too many houses on the market, and after a while it settles in. But it's really limited to an industry. In this case, in the first time in our history, we're going through an event that is, widespread. So there's going to be help available. There's going to be things that we can do. So by managing cash flow, it'll put us in a position to take advantage of the opportunities that will coming out of this. I'm just going to go back to the PowerPoint for a minute. Second here. So the conclusions of this is, we need to work with the issues, whether it's a shortfall or a surplus that we have in our cash flow. We need to know what they are and start thinking about it. We need to move receipts or disbursements around. So, look at the timing, look at what you're having, communicate as much as you can. You probably need to find injection of funds. It doesn't need to be all from your own sources, but again, like I mentioned, the government programs that are there and everything that's happening. I'll repeat myself here a little bit. This is really a living document. So it provides clarity. It provides you with a communication tool. So you can really, with this, being able to talk to your suppliers, talk to your bank, talk to anybody that is part of this issue with you, and be honest and proactive in saying, this is what's happening, and see what you can do, and seek assistance. Like, there's a lot of people out there willing to help in a situation like this. So don't be afraid. You're not alone, because, as I said, like, we're really in a life-changing event, and everybody's going through it at the same time. So I think there's lots of help available. And in situations like these, cash is king. So any opportunity you have, whether you need it or not right now, take the relief that's being offered by your bank, take the relief that's being offered by your credit card companies. Any opportunity you have to reduce the outlays of cash will go a long way in permitting you to take advantage of this and getting through this. So that's my presentation. Open to questions.
Thank you, Richard. That was so. We do have a question from Mike Cormier. He says that the government is warning that businesses do not take advantage of the offered programs unless it's actually needed or risk facing large penalties. Do you really think that it's wise for a small business to take the risk of applying for the program if they are actually able to pay their overhead?
Well, again, it depends on, if I had a crystal ball, like, I could answer that question for you. Like, I think if it goes longer than we think it's going to go, the programs will continue. But at this point, like, I'm not saying if you don't need it at all and you're clear. At this point, I'm saying, look at your cash flow of what's going to happen, and then figure out if you think you're going to have an issue or you're not. And from there, you make that decision to apply or not to apply. But to not look at it and not plan, and then be surprised at the end all of a sudden where you run out of cash. Like, from my experience in banking and that, it's always easier when you're not at your last cent to get something. Like they say, when you don't need it, the banks are always there. So it's a bit of that. Like you don't want to be overdrawn, and you don't want to have the bank bounce 3 checks for you before you apply for this. So I'm not saying everybody rush out and do it, but I'm saying take the time, look at your cash flow, look at your business in a very serious way, and see what you can do. Like I'll give you an example. In our case, we're really, really busy right now, but the reality is we'll be waiting for money. No, so whether I bill or not, my reality today is my collections are probably going to be a lot slower than they were. If I'm not honest with myself and don't believe that, I'm going to have some issues. So in order for us to prepare for it, we've kind of said, okay, we have some good clients, we want to work with them, and we accept that probably we're going to be waiting for payment. So what can I do to prepare myself to be able to weather that storm of saying, my receivables, instead of being 100,000, could be 200,000 at the end of this situation. So if that's the case, what can I do to accommodate that and still work and help other people doing it? So it's about planning, and there's no two situations alike. But if I can give a piece of advice, it's really look at it soberly, look at it as seriously as you can of how this will affect your business, and then make the arrangements that fits you.
We often talk about when we're seeing here mostly that the tourism industry is greatly impacted. We're seeing like hotels that have closed. A lot of people actually have closed. What and restaurants that are working to the minimum. Yes, you have to think about the overhead, but how can you prepare in order for? I'm not want to say next time, but is there a magic percentage of fund that you should always have in place in order to be able to respond to such
what clients that we typically work with, Natasha, like for me, the available cash should be, once we get a firm, we're comfortable that we've covered our basic needs. The rule of thumb that I use with clients that I work with is a third. So a third of my profits I shouldn't be using more than a third of my profits to service my debt. So that kind of makes decisions on how much debt I should be carrying. So a third of my profits goes towards debt. A third of my profits goes towards reinvestment in the business. So again, if I'm making $100,000 a year, $33,000 would go to that. And a third of my profits should go to the shareholders. And that's one of the places, I've been into that shoe, and that's one of the places that a lot of times we put all our eggs in the entrepreneurial basket. So our business is everything. But when we have a situation like this, personally, we don't have the means to do this. And I'll give you a firm example from my own life on that. When I had the boat building company, we were reinvesting every penny we had into new molds, new designs, and we were doing really well. Like we were like the proud child of ACOA, and everybody liked what we were doing. We were, we sold products around the world. This small company out of Baie-Sainte-Anne. So when the crisis hit, and it was a cash flow crisis at the time, I was asset rich but cash poor, and everything had gone into the assets. And I remember sitting down with BDC at the time, and they were saying, it's fine, you have all those assets, but you can't afford to pay the payments. You have no cash. So, it was a hard lesson. Like, I call it my doctorate's degree, and I still have the scrapes on my knees to prove it. But it was still a lesson that there's a mix that needs to happen. Like the business is there to generate wealth for the shareholders. It's supposed to it has multiple roles. So anything I would say long term to avoid this is, you should have that mix of a third. And I mean, you could talk to different people, and they could have the percentages divided a little bit different. But in my opinion, at those numbers, if you look at debt servicing, at reinvestment, and then in shareholder wealth, the shareholder wealth is really important when you come to a situation like this, because the shareholder is now in a position to reinvest in a company to keep it afloat. While in my case, when it happened, everything I had was in the business. So when it happened to us, I had, all of the savings, everything that we had put in had gone into the business. So all of a sudden, you don't have anything to fall back on.
So we're just going to go to David Barnett's question, and then we'll go to Charlene Lavoie and then Louise. So David was saying, if you're using cash flow band-aids to stay alive, at what point do we draw a line in the sand and say, I'm not borrowing anymore, and putting in any more money of my own money in it?
Again, that's a very personal question. In my case, again, I'll talk from experience here. I drew the land in the sand, and I crossed it about 3 times and lived to regret it. Hindsight is a beautiful thing. So again, my advice here is have a sober look at what your business is doing, and is it going to be like the industries that are going to be hard hit. And I know we're doing this for tourism, and these are industries that are going to be hard hit. Like, there's no polite way of saying it or politically correct way of saying it. We're seeing the signs already. Even if the self-isolation stops, like, I'm not sure how fast people are going to go back to traveling, and so you could look at a full season lost. So again, look at the business model. Could you be doing something else with the assets? Could you be, can you reinvent yourself with what you're doing? Restaurants, could you be doing meals frozen that people can take home? Like, there's different things that can be done. Like, and this again becomes one of the things that some of the clients that we're working with right now, they're working on their business. They're looking, like, I've got 2 major categories of customers right now. Those that are really in a defensive position of trying to stay alive, and those that are going to be well poised. Like, there's going to be mergers and acquisitions. There's going to be a lot of things happening. So, unfortunately, it's the opposite sides of the same coin. When something goes down, something goes up, and we will see that. So again, advice I would give is really look at your business and say, okay, can I change my model a little bit? Can I adjust to do? But if you're in the hospitality industry, like, it's going to be a longer run than a lot of other companies, guaranteed.
We're going to go to Charlene Lavoie's. Would it be advisable to use the government funding to consolidate debts at this time? For example, the 40% interest is lower interest than my startup loan, and so if she puts all the credit cards and everything together, would this be a good time to actually consolidate debts and move forward with that, taking advantage of the situation, possibly, right?
It would be, because that loan being offered, again, is 0 interest for 2 years. And if you pay it back, you get a 25% forgivable part if you can pay it back within 2 years. Yes, again, like, it's hard to say without looking at the full situation, but to exchange $40,000 in debt for $40,000 in debt, even though it's better terms, you still need to worry about cash flow. Okay, cash flow for me is going to be the biggest challenge that we face moving forward. So and don't underestimate the length, and don't underestimate what you need. Like, take a sober look at your own situation, what you need to live. And the reality that we're living is, the gas is cheap right now. I gassed up my truck 3 weeks ago, and it hasn't moved in the yard since. So that's an expense I don't have. I was telling my wife, like, my business credit card, I haven't had a charge on it in 3 weeks. So that's the reality, that some expenses are going down. but revenues are changing too. Plus, I'm looking at my receivables and thinking there's a few companies there that I'm not getting paid on right now. Like, I think they're still good, but reality is I'm not getting paid. So that's kind of, you need to look at your business that same way.
Excellent. So Luis is saying, what about the 75% the government gives to pay our employees, even if they do not work? So we still have to pay 25%. Do you suggest we go for it or not?
Well, that one's a tough one. Again, I wouldn't I wouldn't go for it if you're not producing. If you're in a position to produce, I would. For all the entrepreneurs out there, if your salaries have stopped, like I'd recommend that you go for the $500 a week program that the government has. For the employees, like it's kind of tough, and I think like all of these programs are in flux, like they're changing on a daily basis. And I've had a lot of clients that are in difficulties now, but they're not necessarily down from last year. So let's say you did a big expansion, we're in March, so let's say last June you did a big expansion and you're producing, you've gone to another market. You look at March compared to March last year and you're still up. Like us, we're up for, like, a lot of our consultants are struggling, but we're up for March. It doesn't mean that there's not an issue. So I can see those programs changing a little bit on how they go about, and I could see that they're going to encourage that 75% of the salaries to try to restart the economy. So I would like it. It's a huge program that can really help when productivity is going to be low and things like that. I think they're going to change a little bit, but it's really tough. Like, for some of you that are in the hospitality industry, are you really down? Were you really down during that period or not? It all depends. You could have had a hotel that you had 10 rooms last year, and then you did an expansion. Now you have 20 rooms. Your revenues are up, but you're struggling more today than you were before. So that program, like the characteristics of that program, to me, isn't quite up to speed of the reality of the world. But the government's doing a good job of trying to be forthcoming here. It's just, between working for government and being an entrepreneur, there's a huge gap. Like, we live it on a regular basis. So I think they're being coached, if you will, and they're being told, and they've adjusted a couple of programs that didn't make sense that they had. So I can see this moving, but for now, like, it's if you qualify, I say go for it, but not just to keep the employees. Like, I think for your employees, like, there's programs with the $500 a week that can really help. Like, it's very fast. Like, I did it with somebody this week. It's very fast, very easy to do. So that program, if it seems to work well, can help a lot of your employees.
It's sad to say, but it's true that we do have to put the oxygen mask on us first, right? If you are, as a business, do not have the cash flow necessary, your employees won't have a job later anyways.
Yeah.
So
That's a good analogy, Natasha.
Thank you. If you have any more questions, so I don't have any more questions at this point. So we're going to, is there anything else that you would recommend at this point that we take into consideration, Richard?
No, again, part of this, like, there's two things that we're preaching right now. First is cash, and to show the reality of where we are. I posted about cash 3 weeks ago on LinkedIn. It's probably the post that I've had the most views, and so there's no doubt that that's a pain point right now that's in the market. So that's the first part. I say, get a clear understanding of your situation, and don't be like, as much as I'm an optimist in life, and Natasha knows me for a long time, I'm saying, look at it pessimistically a little bit, be conservative, kind of look at what could be worst case scenario and say, okay, could I live with that? And try to figure out what that is. So that's the first part for me. You take that pressure off, and you're kind of looking at it and you're saying, here are my issues, here's how I can deal with them. The second part then is to start looking at your business model and saying, okay, if it's going to be 12 months, what else could I be doing? How do I save this? Let's say I still want the business 12 months from now. I may need to do something else in between. I may need to repurpose my assets. I may need, so again, that's an exercise that can be done to help you figure that out. I invite, like part of this thing, like I'm treating my time like lettuce. We're very busy through this. If you need to just send an email or ask a question, it'll be my pleasure to do it. I can share the little spreadsheets, a very simple spreadsheet. But this is, again, I mentioned it, we're going through a life-changing event. We're living history. I was telling that to my son, like he's in grade 11 and enjoys history. I said, you'll be talking to your grandkids and talking about the summer of 2020 when you couldn't even see your girlfriend, and say this was it. So that's where we are. So we need to work together. We need to do a little bit each day to find a way to help out, and that's how we're going to come out of this.
Yes. So if you're having challenges and stuff, take advantage of Richard. If he's offering it, send him an email. I know that he's super busy at this time, but maybe he'll have time to help you. We will send you also the template that Richard has been working on. So again, thank you so much, Richard, for all that wealth of knowledge. It's so useful. And we want to thank you, everybody, for joining this webinar. But also, we want to say that TINB is here. If you have any questions, if you have any specific topics that you want to talk about, like we're going to try to have webinars a little bit more often so that you can be more tooled in order to confront this reality that's we're actually impacting us. So again, thank you again for everybody for joining. Thank you, Richard, for this.